best. Next slide, please. I'm going to shift it a bit to the right. That would be great. One quick mention about what insurance is. Insurance is the ultimate community product. And it is how we build resilience, as we have done since the 19th century. It forces us to take science and truly understand risk. All science, from meteorology to engineering to economics. And it translates it like a magic gearbox into the next thing, which is what are behaviors that are resilient? What are the rules we should live by independently and individually, and as factory owners and as hotel owners and as guardians to be safe? And then critically, it creates a means by which locally, nationally, regionally, and globally we share those risks. Broadly speaking, 10% of all the premiums that we pay in the world go into a global pot called reinsurance. And then when something happens in the world, billions are transferred. Not just because of people responding to a humanitarian poster, but because they have contractually agreed to share their risk. But you have to be connected to the system. You have to be financially included. Otherwise, you cannot benefit from this beautiful community product. And we have to embrace that here today. Next slide, please. Oops. So effectively, what we want to develop together, not just Willis and Munich Re, but all of us and the broader community, is effectively a catastrophe risk insurance platform for the Philippines, which will bring the best of science, the best of policy and regulation, both locally and nationally, and the best of capital, whether it be premiums from smallholders, legislation that we, with our partners, Munich and others locally, but indeed internationally, have created a technical set of solutions which are, frankly, now ready to go. And we can see that in the next 5 months, with everyone's coordinated help, not least of the leadership of Senator Lagarde and the Ministry of Finance, that if we all want to, we could develop a facility providing over $1 billion of capacity for this country by June the 1st. This is something I think we need to do. It is a start, and then we can see a journey in the months and years ahead. It will be an immense achievement, but one that is recognized here but around the world. And just as the world is, I think, coming to bring all it can bear to support the Philippines, we as a world need your leadership in a paradigm shift we are all having to make. And with that, I hand over to Ernst Rausch. It's our privilege as a global insurance broker. We deal with thousands of insurance companies around the world, and we deal with a few hundred reinsurers. And we place about $60 billion worth of premium around the world, and nearly half of it is around natural disaster risk. I have to say that of all those, there is no greater leader in this market than Munich Re. There could be no greater leader for this program to give it global impacts. And I have to say it's been my pleasure to work with Ernst for nearly 10 years as his leadership of the Munich Re climate programs. And Ernst, it's been a pleasure to work with you on this program.
We acknowledge the presence of the Senate President.
You heard in this introduction by Jerry and Rowan what the overall framework is and the situation is with respect to catastrophe insurance around the world and the situation here for the Philippines. I'm now going to suggest a product, a risk transfer solution, which we believe jointly together with Willis, that's a product which is absolutely tailor-made and fits into with the needs of the Philippine situation. Could I have, this slide please or so. What you see here is that the world itself knows that there are two generic insurance concepts when it comes to catastrophe insurance. The one which you see here on the left-hand side, which we labeled PRISM, as Rowan pointed out, that's a so-called index-based insurance transfer scheme. What does it mean actually? It's based on objective scientific triggers. In concrete terms, if a certain wind speed and or a certain rainfall amount is exceeded in any given LGU here within the Philippines or so, then a payout, a predefined payout is triggered. So we don't need to go through detailed claims handling processes. It's a very lean structure, a very lean concept, and it's proven and it has been implemented in different parts of the world. For instance, in Mexico, they have a similar product which is here named PRISM. They call it Fonden. And Fonden, and I will explain it in a minute or so, it started out as a parametric trigger concept, also based on wind and rainfall, and now turned into a full indemnity-based insurance scheme. Could I have the next slide, please? So this would be the next concept, which is much more sophisticated, so where the payout is based on the actual loss occurred. However, to have an indemnity-based catastrophe structure here for the Philippines, certain requirements needs to be fulfilled, like on the data side, but more so on the risk modeling side itself. So the beautiness of the indemnity-based trigger, that's what we're suggesting here to get a quick kick-off, is that payments are based on objective, neutral scientific data. And there is an organization, the DHI, the Danish Hydrological Institute, located in many parts of the world, which we utilize here out of Singapore, which has developed years ago a monitoring scheme. It's a satellite monitoring scheme for rain and wind, and then based on the satellite data, actually return periods of rain or wind speed are calculated, and like once again, if they are exceeded, the payout is triggered, and that happens within a couple of days. A similar product has been implemented in the Caribbean, named CRIF, and the payout is within 15 days. So it's simple, and it's proven, and it's absolutely tailor-made for the situation here, based on tax income with local government units. However, this is not the end of the road. We believe the Philippines should have, like in other parts of the world, a mid- and long-term perspective as well, which means, next slide please, what you see here on the bottom is that if we start implementing such a trigger-based concept very soon, very early, which could be done within 6 months actually, so it's not legislation necessary, it can be started very quickly, but then evolve into a full indemnity-based scheme. So what is the technical setup needed? And it's also straightforward. So you need someone who operates such an insurance scheme, and that's labeled here as SPV, Special Purpose Vehicle, which is an organization, which could be already also an organization already existing here in the Philippines, like GSIS or Philippine Re, or a partnership of more than one of these organizations. So the premium payment, as we suggest, would come either directly through the national government and or also the local governments, but channeled through the Philippine national government. But also, and this is what you see on the right-hand side, the product itself, the risk transfer mechanism, also allows for donor money. So it can be a combination of both of local resources, for instance, through the various funds like the calamity funds, but also then supplemented by donor money. The beneficiaries, that's on the left-hand side, from your angle, the beneficiaries would be the local municipalities. So the product itself pays out to local municipalities according to their wind and rainfall triggers as predefined in this scheme. International insurance capacity is available through the international insurance market. Munich Re, we have a long history here in this market. We have committed ourselves that in the initial phase we would be ready to take up to 100% of this product, and then as it evolves it has to go out into the international market and sold there as well. What you see on the upper right hand side, this is what I mentioned with the Danish Hydrological Institute. That's the monitoring organization, and also here over time local Philippine scientific organizations like Pagasa also could participate in this trigger development. Experience could be built up, and indeed the Philippines could become sort of a local hub in this region for these developments. Next slide, please. Now, how does this work in concrete? What you see here is, and this is what we suggest, to have a payout depending on so-called return periods or exceedance probability of rainfall amounts or wind speeds. So, and this is calculated on return periods versus wind speed in kilometers per hour and rainfall in millimeters once exceeded, and it's up to the Philippine government to decide whether we would like to have a trigger scheme where all these frequent events trigger a payout, or whether you go for long return periods, then you don't have payouts as often as you would have it if you go for a trigger of 10 years or so, but you get higher payouts as typically rare events with a long return period are larger in size and larger in loss. The next one, please. So what's shown here is that's actually what is in place already here for the Philippines. Is this monitoring scheme. It's a satellite-based scheme, very straightforward. There are all the calculations, and there are